having an insider that can help you navigate through the corporate they're attached to is super valuable. It can be worth its weight in gold if you're able to talk to your corporate investor and have them help you um, close that deal. I will say a lot of corporate VC is still tied to, um, whether that startup is already doing business with the corporate. And so it's, there's kind of a growing trend, I think, of standalone funds outside of the corporate. So it's less strategically relevant. However, there is still a very big group of
Sure.
corporate venture that um, they only invest if you can show that a contract is in place or about to happen, and then the ventures team will get involved because that strategic box has already kind of been checked for them. But if it's more of a hybrid model, WVV is more of a hybrid where we were looking for strategic value to at least one of the corporates plus
Mm.
looking at the financial returns. And so we were a standalone fund with each of these corporates. And it's actually a very unique model because it was for very different corporates. There was no overlap.
Mhm.
And we served each of them equally, between the investments they made. And so we were looking across the board at things that they would care about. But because we were also looking at a sector that they may not be able to look at themselves because it's not strategic, we would bring companies into our portfolio that, if successful, would benefit the other corporates, right? Because it's a financial fund, right? So if money returned back, say a healthcare investment returned back money to the fund, yes, it's beneficial to our healthcare LP, but all the other LPs get money back too, right? Versus not being able to do or look at that deal at all because they're not a healthcare company